the traditional way for households to save, for the ordinary man and woman in society to save, that is to save money in the bank, and then most people, they have an apartment or a house in addition that they also use. But if you look at what the best savings alternatives are in the longer term, I can use an example. Like in Norway, over the last 10-15 years, we have had a big public debate. Like Norway is producing oil. That oil will run out at some point in the future, so we cannot spend all the money from the oil now. We have to set a little aside for the future when we don't have that income. And it's quite big money. Now we have this petroleum fund that is in Lithuanian litas, 1,500 billion litas. It's the world's biggest single fund. And then the question is, what is the best investment? Where should we put this money? Should we have it in the bank? Should we invest it in real estate? Should we put it in gold? Should we put it in bonds? Should we put it in equities? And it's been a lot of experts who looked into it. What is the best thing given the quite long time horizon? And the conclusion is 60% equities, 40% bonds. In the long term, equities give superior returns. And why is that so? It's because it's risky. And because it's risky, investors have to get compensated for the risk. If not, no one will invest in equities. And if you have a long time horizon, that means like typically 5 years or more, equities should be a substantial part of your savings. The problem is for the ordinary person, like how can I save into equities? Of course, he can try himself to buy a share in Theo or something else, but many people feel they don't have the competence. And also, you shouldn't have all your savings into only one company or two companies. You should spread it out. And that is why we have the mutual funds. And in the mutual funds, you have an asset manager who knows the business, who knows the market, who knows how to invest, so that this becomes a good savings product for the ordinary man and woman. So my job, or the asset manager's job, is to give the ordinary person the opportunity to save long-term into equities, just as the big professional investors like the Norwegian petroleum fund. And this is a need. People need to save. I mean, when you work, you should save a little for your pension and unforeseen cost and so on. And simply saving only in the bank account, where you get basically zero return, or only in your own house, that is not the best strategy in the long term. You should also have part into equities. But then, if you don't know, if you're not an expert into the equity market, the safest way is to go through a mutual fund. So, as long as people want to save money, as long as they want good returns, there will be a need for asset managers and mutual fund. The question is, do we produce something useful for society? Well, what you really ask then is, does the stock market, do the financial markets, do we need them? Do they produce something useful for society? At least in almost all countries, capitalistic countries I know, you have a stock market. And it's a little hard to explain in one sentence what good it does produce for the society as a whole. But I think most people who know this area very well, they will say that a stock market is a benefit for the economy. We need it in the capitalistic system, just like an engine needs oil to function properly. You cannot exactly say what the oil does, but if you don't have the oil, many things will start to go wrong in the engine. And maybe the most important investor in the financial market, in the stock market, that is the pension funds and the mutual funds, what we call institutional investors, they play a crucial role. Without institutional investors, it's very hard to see a functioning stock market. For example, the main problem here in Lithuania, in the Lithuanian stock market, is that there are hardly any institutional investors, and that's why the stock market is quite dead and in a zombie state.